Welcome to the 10 Mil Club's standard portfolio meeting for ending the second week of April of 2026, going into the third week of April of 2026. In this meeting, we simply talk about the portfolio that we have, our standard investment portfolio. We're going to talk about what we own, what we're looking at going into the week. We don't do a lot of deep dives. If you're looking for penny stock stuff, this is not the place for it. This is where we are simply interested in trying to beat the averages. So let's get to it.
From Nashville,
It's the 10 Mil Club. It's the 10 Mil Club.
All right. Thanks for being with us. This is our weekly portfolio meeting. There's not a lot of glitz and glamour here, and we move fast through a bunch of stocks. First of all, nothing on this channel is financial advice. Do not go trading or investing solely on anything that we say here. At the 10 Mil Club, we do care an awful lot about building wealth. What is the 10 Mil Club? The 10 Mil Club is actually an unofficial group of people who all believe that if we could get to $10 million of wealth, we would be free from having to answer to the man, so to speak. And so that is our goal, and we work on it. If you believe in that goal and you feel that it's noble, you remember the 10 Mil Club, and we welcome you. Like to say that anything that we discuss on the 10 Mil Club videos, we may own those stocks, we may not own those stocks. I will do my absolute best to give you my fair and unbiased opinion and my honest answers. If I can't do that, I just probably won't say anything at all. But our positions, whether we hold shares, don't hold shares, are thinking about holding shares, or not thinking about holding shares, can change at any point in time, and you just need to know that. The securities that we present here may or may not be suitable for you. You will have your own ability and willingness to bear risk. We know that. We hope that you know that, and that they may not be suitable for you. So, and any valuations you see, we're not going to have any on this video, but any valuations you see are not showing all of our work. Do not comply with any of the standards and ethics of the valuation societies and groups to which I am beholden, and really aren't reliable other than back of the napkin conversation. Let's get to it.
10 Mil Club.
If you want market overview stuff, you need to get on Dave Keller's Market Misbehavior channel. He does market overview stuff far better than I will ever be able to do. I hang on his every word. I watch his channel every single day. We're not going to do that, but we are going to just very briefly touch on a couple of things that kind of indicate the market. This is a year of the VIX. We have had a rotten market over the last few weeks. And a VIX over 20 is not great. There's not magic in 20, except for the fact that over 20 is kind of elevated. VIX can go a lot higher. Here we are back at the tariff tantrum era with the VIX significantly over 20. We got that way with the Strait of Hormuz and Iran here. And just in the last little bit, we have come back down. Now, over this weekend, there have been some developments. The Strait of Hormuz is now declared closed again, and there's a lot going on in the world, and the market can go up and down. But we have seen a decline in the VIX, which means that volatility, there's about an 80% correlation between, negative correlation between volatility and market price direction. So if you are thinking in terms of volatility, market gets really volatile, people are worried about it, prices go down. There is another index. So the VIX is the volatility index for the market, for the equities market, the MOVE index is kind of the volatility index for the bond markets. The smarter money is generally in the bond markets. So if we look at the MOVE index, it's spiked. It rode up through much of the early part of this year, and we backed way down over just the last few days, which led to one of the only two moves that the 10 mil club really made this week. So let's talk about what we own. First of all, we own TJ Maxx stock. We bought TJ Maxx back here at $151 in the middle of the $151. We're currently up about $6, 6.56%. It's not really at a buy point right now, just touching in on the fact that we bought it. We did a deep dive on TJ Maxx stock and compared it to Ross and Burlington. And that's on our channel, so if you'd like to check that out. But as of right now, we are exactly what we want happening with TJX, doing great. Coupang, we actually own Coupang. We bought Coupang based on this down, 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 crossing, and then moving up. In this area right through here, one of these spikes, I can't remember precisely which one, but a major investor bought a big amount of shares in Coupang. I believe it was right here. And then we hit Iran and the Strait of Hormuz, and we go down, but it didn't seem like it was so bad. My stop is down here. And folks, use stops. It would waste our time and resources and probably your attention span at the 10 mil club if we were to do an entire segment on stops and stop using. Read Mark Minervini's books. Read William O'Neill's book. Take Schwab videos. Get on YouTube and find how to limit your risk. Don't just buy a stock and never set a stop. Common equity, okay? So just, anyway, our stop was down here. We could have pulled the plug when it came down below this line. I thought, that doesn't make a whole lot of sense. There was support here. This is a temporary thing. So far, we're doing okay. We're up 4.88% on Coupang. That's CPNG. Moving on, we hold some shares in Fox. We bought Fox. All of these we screened for fundamentals. We're not here to deep dive today. We're just going over the portfolio. Fox B, Fox Class B, I believe there are also Fox Class A shares out there. We bought the B shares because there was a vote and they were reasonably liquid, and we went with those. But that's another conversation we had in the past. They dove. We bought them down in this area. We are up about 3.5%. So far, we're doing okay. That upward trend is in place. We're in good shape. Car Gurus we bought. This one's interesting. We bought this, and after we bought this, a lot of volatility to it. A lot of times we aren't into stocks that have this much volatility here at the TMC, but we bought it as it crossed this line, and then, up, down kind of thing. The Wall Street Journal actually put out a major article on this just past couple weeks, and we've been kind of the beneficiaries of that. We're up 6.39%. Could have pulled the plug a couple of times. This was our original upline. We didn't because it seemed like, look, I'm going to be honest. I am terrible. I am terrible at short-term entries and exits. I can't day trade to save my life. I actually took a day trading course. It was a free one by a fellow named Kyle Henris online. I did the whole thing, front to back. It was free. If you'd like to, it's still there. If you'd like to get on, I believe I found it through Facebook, but he uses a school account, SKOOL. It's an online educational format. I gave it my best shot, and I still use it, like his supply zones and demand zones and directional changes and things. It was fascinating. What I was trying to do is I was trying to improve my entries and exits. So far, I really have not been able to do that. So if you can day trade and you can pull it off, great. Penny Stock Millionaires, where I spend way too much of my time, is full of people who claim that they can, and I'm sorry, I'm just not with you. So anyway, wasn't such a great entry for a while, but we still had the uptrend in place, and we still do So Car Guru's in good place. We're up 6.39%. And then the one other thing we own, Ford Preferred B. Okay, we're going to get into now what we did this week. We now own a stake in Ford Preferred B shares, and the reason we did that was because with all of the Strait of Hormuz stuff, it was already kind of battered a bit. Down it went, it crossed. I am a sucker. I'm just being honest with you. I am a sucker for a really good fixed income position. I mean, understand, when we talk about the 10 mil club, what we're talking about is the fact that we would like to get to $10 million of wealth, but having several million of that in fixed income so that we can go do whatever it is we want to do. And fixed income, I will never be able to get over fixed income. So I buy, when I have an opportunity like this, I go and buy a stake. I did a screen of Ford. I did not do a deep dive of Ford. We here at the 10 Mil Club did not talk about doing a deep dive on Ford. Probably should do one. If I can remember, I'll make a note of it here. Deep dive on Ford. But these are the preferred shares. There are 3 classes of preferred shares. The Ford, I believe they're preferred B, preferred C, and preferred D. One of them has a coupon of 6%, one of them has a coupon of 6.2%, the other one has a coupon of 6.5%, and you would think, well, why didn't you buy the 6.5%? It just so happened that when we ran the numbers, the 6.2% Ford preferred Bs were actually giving the best yield at the price, and if you don't know how to calculate yield from price, we use stuff here at the 10 Mil Club, but don't teach it a whole heck of a lot. Unless somebody really wanted us to teach it, we probably could, because the thing is, you can get on Schwab videos and all kinds of things out there, and you can learn kind of how to go about calculating these things. But we were getting over a titch over 7.5% on these, and I just couldn't help myself. I bought a stake in them. I know it doesn't say it right here. That's a different account. But we did. Here at the 10 Mil Club, we refer to that as putting money on the wall. And the reason is because in my bedroom, I have a piece of paper with how much I get in dividends every month. I write it down just into the beginning of the next month, and how much my portfolio is worth. I have 2 different pieces of paper, and I write that down. And this sort of thing puts money on the wall in the dividend area. So that's what we refer to it as, putting money on the wall. Anyway, we bought that this week. Really great deal down here. We actually bought it at $20.51. It actually closed at $20.44, even better than we bought it. So just to let you know that that's there. All right, and the other thing that we bought this week was ROST stores. I know it's in a different account. I know it doesn't say anything here. Now, here's what's funny. If you go to our deep dive video on TJ Maxx, we talk about ROST, and we talk about it extensively. You can see the uptrend here, and I can draw it, 6 ways from Sunday, as they say in the South. So, it's not at a perfect buy point. I know that. It does have this uptrend here, but we bought it, and truth be known, the reason we did it was because in the deep dive video, when I get to the end of it, our thinking at the 10 Mil Club here was, well, if I had to buy one, I would buy TJ Maxx because that's the one that's actually internationally diversified, and if there's a void 100% America right now going on, you probably want to buy TJ Maxx. Turns out, since I said that, ROST actually has done better than TJ Maxx. And so with that kind of accumulation going on, we thought we'd participate, and we bought a stake in ROST. So there it is. Sometimes we do things based solely on technicals, and that's what we did. This is what we're looking at this week. Lightning round real fast, and then we'll be done, and you can get back to eating your taquitos and drinking your root beer before you go to bed. So adaptive biotechnology, ADPT, these, upward You can see the upward trend, the classic upward trend with the sell-off that we look for here at the 10 Mil Club. These here, if we go to 1 month, 1 hour, these here are actually higher lows and higher highs. You can see it. This is 12. This low right here is 1202. This low right here is 1236. And each of these highs is also higher than the last one before it. And so we are looking, and I don't know if you subscribe to Tip Ranks. By the way, as of yet, we cleared our 30th subscriber this weekend here on the 10 Mil Club, which means that while we are watched and are thrilled, we are not so big that we move the market. So if you're out there watching us, you're kind of getting the benefit, and we, can't even put ads on here. Can't even monetize the channel as of yet. So why would we lie to anybody? But all of these things, Seeking Alpha and Tip Ranks, they're kind of getting, freebies off of us because we use them all and we mention them because they're good places to go. But they're not sponsoring us or anything as of yet. So if I mention something, it's simply because I find it useful. So anyway, Adaptive Biotech, ADPT, these are higher lows, higher highs. We are looking into that this week. Clorox Company, we had a stake in Clorox Company. We bought it here at 109, pulled the plug. Actually, we call this gain stopped out. We had our stop set and the market kind of turned mean on us and we moved the stop up and then we got stopped out. So we made from 109 to 115. That was a pretty decent trade. We're looking at it again because with the let off of the VIX, market's turning here. That's a good one. Procter & Gamble in the same kind of thing. Now, both of these actually have a 1-year downtrend, which is not typical for us here at TMC. But these are very large companies. Procter & Gamble is actually the largest company in the consumer staples space. And what this is, oh, it's a terrible economy, this sector's going to do great. And then this is, oh, the Strait of Hormuz. And then this is, wait a minute, why are we selling everything off? So we think that probably through here we're probably going to get a lift on Procter & Gamble and may likely be going back into it this week, but we will certainly be looking at it. AFRM, AFRM is one that we look at. You can see the 1-year uptrend. If when in doubt, zoom out, as Dave Keller says. We're going to go with 2 years of it. Touch, 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 and move. So we are looking into AFRM. This is a payment point of service company, and we like the look of it here at TMC. So we're going to be looking at that this week. Amprius Technologies, AMPX, here is 1 year of it. Yes, that really is $2 a share. Yes, penny stocks do this. No, the majority of them do not. And so when you hear from us here at the TMC and we're just going through sheaves of penny stocks and we're going, yeah, nope, not on that. Nope, not on that. Nope, not on that. It's because it is truly a dustbin. But every now and then there's just something that's really worth it. And so that one would have been. We weren't looking at it back at that point in time. In fact, the 10 Mil Club did not exist at that point in time. I think at that point in time, I was still trying to recover from working through a very large financial program that I was working on that I thought was going to kill me. But we made it through. Anyway, I missed out on this one. But this is not really a buy point. We're going to have to dig down into that. Probably will be doing a deep dive on AMPX sometime here pretty quick. Moving on, Armstrong World Industries, AWI. This one, you want to look, if you want to look at 2 years, AWI. You can see the uptrend touch, back down at the touch, curving around, life's getting better. So this one we're going to be looking into this week. HCSG, the Healthcare Services Group, once again, here we are with the uptrend, touch, 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 back at the line. And we're going to be looking at that one this week. HCSG Hecla Mining, HL. Remember the gold trade that went on? Well, the gold trade that went on is kind of a funny thing. It ran. Then it went parabolic like this. If you are a wily, crafty trader, you sell directly into something that looks like that. If I'm being honest, I'm not great at that yet, but I try to be. I've pulled it off a time or two, and every time I do, I feel horrible in the moment and really, really good about 2 weeks later. But it came down road, then the market kind of sells everything off as a ran happens. And now we're starting to hit this uptrend again. So it might be time to take a look at Hecla. Laura Sue actually pointed out that we watch here at TMC, we watch both. Now we watch a whole big list of stuff a lot bigger than this. I'm just bringing you what we're looking at this week. KGC, which is Kinross, is another one that we watch. Laura Sue pointed out that Kinross actually has an RSI over 60. That's down here, so 60.95. An RSI over 60 and is above its 50-day moving average. That's that yellow line right there, if you can see it. Let me zero in a little bit. 6 months here. All right, so here's the 50-day moving average. RSI over 60, 60.95. And so it has the kind of upward momentum that Dave Keller likes, okay? Another shout out to Dave. I actually learned that from him. He wants to see a confirmation of some sort, and he uses the RSI a lot. And so on this one, kind of Dave Kellered this one. If you go back to Hecla, interesting, it does not have quite the same profile. So an RSI of 49, and it's below its 50-day moving average. So if you're deciding on the gold trade now, Kinross, I believe, is significantly bigger than, let me take a look here. So yeah, Kinross, $40 billion market cap, Hecla, $13 billion market cap. So that kind of makes sense if you think about it. What really happens is that you have, the money, if it filters into a sector, has a tendency to pile into the larger companies or the leaders first. They can usually get better capital. They usually have lower debt. They usually have better management. And then it filters down from there. So it's one of those things that's probably starting farther toward the top and then going back down. But we are watching both Hecla and Kinross this week and may do something about it. One that I watch, RIVN, RIVN. RIVN is not cash flow positive yet, folks. But when we run our fundamental scan on it, it does show a path to profitability. And it's one of those things that the market just has a tendency to believe in. Let's go to the tape for 2 years here. You can just see it. Here's the line, touch, 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 touch. And then lately it's, the same thing. RIVN is kind of an investor's dream in a way if you have the stomach for it, because due to the fact that RIVN actually struggles to get, it's in the struggle, let's say, to get cash flow positive, what'll happen is that the market will lose its faith, but only down to this trend line right here. It'll only lose its faith down to there, and then wily investors will go, yeah, I'm buying, and they'll buy it right down in there. And then every now and then what you get is one of these things where it's like, oh gosh, we're all going electric. Oh gosh, we're all going electric. Wait, no, we're not. Oh gosh, we're all going electric. No, wait, we're not. Oh gosh, wait, no. Oh gosh, we're all going electric. No, we're not. This right here is actually, they announced an AI module, and this is, I'm going to butcher this, I'm sorry, but they announced that an AI module was actually going to not just run the entertainment stuff in the car, but it was going to actually drive the car as well. I think, if I remember correctly, that's what it was. And there was a craze, and then typical of Rivian, the market goes, oh, sell that off, down. And then from there, if you can find a day that price is really, really good. Got that from a guy named Paul Hoven. Paul and I went back and forth for just a little while, and I like his stuff. Paul Hoven, he's on Facebook, and claims to be a guru on chart reading, and maybe he is. I don't know. Understand, I'm newer at this than a lot of these people are. Like Dave Keller's been doing this for 30 years. I'm an appraiser who got a couple of designations and has spent several years doing this, but I don't have 30 years under my belt of chart reading. So, like I told you, I mean, I took a day trading course, and it marginally helped at best. All right, last one, and then we're off. Stephen Madden, we're going to be looking at SHOO this week. This is 2 years of SHOO. Dividend-paying stock. This is a shoe company. I just liked the way it looked with this trend down here, and it did cross. Let me go to a little closer. I'm going to go to 1 year, 1 day. It bumped up over the downtrend line right here, then broke above the 50-day moving average, and we have a move RSI above 63. And so that makes it a candidate for the 10 Mil Club to take a look at for this week. So, hey, thanks for being with us. We really, really, really care about whether or not all of us make money. And I'd like to thank everybody who works here, Laura Sue, Will, Mark Thomas for engineering, production, content help. Especially would like to thank Sophie, Hannah, and Presley, the 10 Mil Club singers, and Jackson, our announcer. And that is the meeting for the second week of April, going into the third week of April of 2026. We will see you next time on
10